This is going to change everything. And over the next few months, Jerome Powell and the Fed are going to have to do some extremely precise economic maneuvering to avoid spooking the markets into a deeper market correction, which will ultimately have an outsized effect on crypto markets because they're more volatile and fund managers are less likely to hold them into risk-off environments. In today's video, we'll be talking about the Fed's recent FOMC meeting minutes, how banks like Goldman Sachs think things will actually play out, how most investors consistently get rate cut predictions wrong, a recent job revision from the Labor Department that actually hasn't happened since 2009, and Kamala Harris and her disastrous approach to winning crypto investors over to her side of the aisle. So in this video, we'll cover the good, the bad, and the ugly surrounding markets and the most important news that made waves today that will affect your crypto and XRP bags. Before we begin the video, head on over to bullrunners.com and subscribe to learn how to take advantage of our all market solution. Doesn't matter if the market is bearish, bullish. Ultimately, you can discover how to earn more crypto in less than 10 minutes with the #1 play to earn XRP game. So if you're feeling blessed and bullish, comment 777, and if you're going to be the richest person in your family tree, smash the subscribe button. So before we begin this video, I just want to re-emphasize just how bullish I am on crypto, Bitcoin, and XRP. But generally speaking, Bitcoin kind of rules the roost over here in the crypto market, being the largest by market cap, having the most attention, being the first with a spot ETF, so on and so forth. Institutional investors are now digging their heels in, really playing with this thing. So that said, this is the long-term trajectory for Bitcoin. Whenever we start to deviate from this orange line, you can see here those local highs, or the previous all-time highs, I should say. Not a bad time to start taking profits. Whenever you're somewhere, at the orange line or just barely above, a good time to start accumulating into a bull market. It seems that we are currently in a bull market with a bit of an intermediate term downtrend over the last 5-6 months. If anything, this just looks similar to a summer lull that we currently experience, or typically experience in the months of April, all the way into the months of October. But still, in the short term, it pays to pay attention and be vigilant, which is why we're going to cover the ugly first. And that begins with Kamala Harris, where Kamala Harris is to back measures to help grow Bitcoin and digital assets in the USA. Didn't say much more than that, but I did a little bit more digging, and here's what we found. Just in, Vice President Harris will support pro-crypto policy. Kamala Harris will support policies to foster cryptocurrency industry. She's going to support policies that ensure the emerging technologies and that sort of industry can continue to grow. Now, we don't really know what that means exactly, but in this administration, there already have been a lot of promises made, like back in 2022, in terms of regulation around stablecoins and the cryptocurrency industry as a whole, that never actually happened, right? And that was under the Biden-Harris administration. Now, that means she could also do something right now, but instead she's holding off and making promises that likely won't be kept. That said, I don't know her to be too popular among anyone in the crypto space, and that's kind of been the reality all along, right? A lot of promises made, very few kept. When you go to, for example, the site of Donald J. Trump, you can even see that at least he has a platform. It doesn't mean that we expect him to keep every single one of these promises. However, he did pretty well in his first term. Some may argue differently, but opinion's opinion. That said, here is the platform and the policies that he wants to start to push. That said, you can even read more right here. Then you go over to the Kamala Harris website, and I'm not kidding, you cannot find a single policy on there. And believe me, I've looked. All they have is, even if you go to the facts, for example, only things about donations and voting and volunteering, but nothing about a platform or policies. To which I find it kind of funny that someone even mentioned Kamala Harris has more pronouns than policies on her website. So it is pretty laughable. And what makes matters worse is that according to some sources, she's expecting to put Gary Gensler, the crypto skeptical head of the U.S. Securities and Exchange Commission, in charge of the Treasury. In other words, he might be nominated the Treasury Secretary under Vice President Kamala Harris. And we really kind of know his position on crypto, which is let's retroactively attack companies and projects instead of giving some regulatory guidance and actual clarity. And so it would really, get me to beg the question, are they going to be working on a CBDC with him? Will they not? Is he going to be harsh towards taking in cryptocurrencies at the Treasury, right? Would we even sell everything? Who really knows? But I don't think we'd be holding too much Bitcoin in our Treasury if he was head. Now, when we talk to levels of incompetence, I am shocked I'm even reading this. We're not talking about nuclear weapons. We're talking about apparently gay nuclear weapons. The Biden-Harris Department of Energy official calls for queering nuclear weapons as a part of a radical DEI agenda. This is from Yahoo News. The Biden-Harris administration announced Sneha Nair, and they had been appointed as a special assistant at the National Nuclear Security Administration in February of 2024. Queer theory informs the struggle for nuclear justice and disarmament, she wrote last year. Queer theory helps to shift the perception of nuclear weapons as instruments for security by telling the hidden stories of displacement, illness, and trauma. At the end of the day, right, if we're getting into a nuclear war, you really think that other world leaders give a crap about queering nuclear theory? It is an absolute joke, and the fact that you would even put someone in a position of power in this administration who doesn't take this stuff seriously speaks to the levels of incompetency under the Biden and Harris administration. So if they're not already doing something in crypto right now that is positive and a benefit for the entire space, I sincerely doubt they are going to if they win office in 2025. And if things couldn't get worse in this administration, it seems that there is incompetency, or arguably they're even lying in certain departments. In the case of the U.S. Labor Department, they revised a 12-month job growth down by a massive 818,000 jobs. Now, this is major because this is the largest such revision since 2009. And obviously that was directly in the middle of the Great Recession and the housing crisis in 2008 and 2009. Now, this is major because it seems that whoever was over at the Labor Department was fudging the numbers or not sharing all of the information to make the economy look stronger than it actually was under the Biden and Harris administration. Compared with the still official numbers, employers might have added 818,000 fewer jobs in the 12 months through March, the Labor Department said. That means the economy could have added another 178,000 jobs a month over that period, as opposed to the current estimate of 246,000 jobs a month. Investors have already been anticipating a downward adjustment for the period in question. More broadly, many haven't quite believed that the labor market was as strong as payroll figures have suggested. And so there's a lot of just kind of pushing blame off. Oh, we might have messed up or whatever. Someone figured it out. Now we've got to actually put out the real revision. But at the end of the day, this is probably another major reason that the Fed kept interest rates super high, that markets continued rallying, because people believed that the economy was in a better place than it actually is, and it wasn't. Now, from the meeting minutes, the vast majority, and they're talking about the Fed chairman and all of the people that are working over at the Fed as participants, the vast majority observed that if the data continue to come in about as expected, it would likely be appropriate to ease policy at the next meeting. And directly from their meeting minutes paper, all participants supported maintaining the target range for the federal funds rate at 5.25% to 5.5%, although several observed that the recent progress on inflation and increases in the unemployment rate had provided a plausible case for reducing a target range 25 basis points at this meeting or that they could have supported such a decision. So it's highly likely in September we're going to get the first rate cut. And as Michael Hartnett from BOFA says, he says sell the first rate cut. That's usually when you want to start to get out of the market. So we do want to practice caution right now. And to make matters worse, most traders consistently underestimate the FUD, and that would even include economists most of the time. In other words, people think we're going to cut rates just a little, when in reality they start to cut a lot. And that's because they're typically responding to a negative economic environment or some sort of a market crash. That's usually what starts to happen after the first rate cut. And that usually comes within a month to 6 months after the first rate cut. Now, Goldman Sachs believes or has projected a series of 3 consecutive 25 basis point rate cuts in September, November, and December, with additional quarterly reductions anticipated next year, aiming for a terminal rate between 3.25% to 3.5%. However, when we look at this article and we look at the data and what actually happens based on expectations throughout history, it says at one point during each of these cycles, the market underestimated the amount of Fed rate cuts by roughly 2.5%. So if the majority of people start to buy into this Goldman Sachs theory, that we're going to see about a 3.5% terminal rate, then it might be more likely that we see about 1% on the rate cuts. The gray shading represents periods in which the Fed consistently raised or lowered the Fed funds rate. The 3 easing cycles shown are 81 through 91, or 89 through 91, 2000 to 2003, 2007, and 2009. And the yellow circles highlighted are gross underestimations. In other words, we're always underestimating what's actually going to happen. And I guess that's just the point, is the fact that if everyone thinks things are going to be fine and dandy, usually what's going to cause the Fed to lower interest rates tremendously, maybe even down to 1% or lower, is likely going to be a market correction that is severe enough, and I would argue recession. And so that can be kind of scary when you think about, are we going to experience a recession? However, as things stand, markets still don't look ready to dump. I mean, just looking at this chart, yes, I'm very, very bullish. But what makes me even more bullish is that a lot of institutional players through spot ETFs are accumulating Bitcoin en masse. Right now, iShares from BlackRock is sitting on a balance of 351,000 Bitcoin, which is absolutely astronomical. And as of present day, right, they've consistently been adding Bitcoin to their balance sheet. In other words, there were only 5 straight days since January 11th where they actually removed Bitcoin from this wallet, and that happened on May 1st and then onward for 4 more days. But the entire time since January, they've been adding more and more Bitcoin. There have been more inflows, which is a very positive and bullish sign. Then when I pull up the Bitcoin chart yet again, and we obviously see that we're in a very strong uptrend long term, I pull up a 2-year MA. As you can see here, whenever we come in below that 2-year MA right here, right, which is a deviation from the midline, I believe, then this is a great time to accumulate. Whenever we start to get into this red line territory, good time to start taking profits and getting out even through a blow off top. And so you can see here throughout history, right, good time to accumulate, good time to start getting out. Good time to accumulate, right? Good time to start getting out. Now, these last couple of pumps were relatively weak, but we didn't have institutional adoption. We had a lot of traders. That said, we also had a long, strong opportunity to accumulate through this range. Well, as you can see here at the upper band and portion of the range, if we even just touched it like we did last time, we would still be sitting at about $185,000 Bitcoin. Now, the reality is we have been in a local midterm downtrend, and just to make things straightforward and simple, right, I would like to see a break above this trend line before I actually maintain bullishness moving into the future. That means I would like to accumulate in this range, but I don't want to over accumulate if we continue to drop down to $42,000. Instead, I want a little bit of dry gunpowder, okay? Ultimately, if I see a break above here, then I'm going to be uber bullish, and I might continue to add to my bags right around here. So ultimately, I don't know what's going to happen with that first rate cut, how severe it's going to be, how it's going to affect markets. Typically, we want to sell the first rate cut, but markets might still have some juice left in them. And it doesn't mean just because it's happened in the past that it has to happen into the future. I just want to be cautious looking forward into the election time. There's going to be a lot of uncertainty around that. There's going to be a lot of uncertainty around the first rate cut. So if Bitcoin and markets continue to rally and look strong and break out through here, then it would be a good time to consistently add to that crypto portfolio. And the same would be true for XRP. I would ultimately like to see strength in the general crypto market, Bitcoin, and then if XRP actually breaks above that 73-cent to 75-cent range, right, I do believe we are going to fly sky high. But as things stand, we're just building a long, strong range since that local high on July of 2023. So it's been over a year we've been hanging in this range now. I think this thing, if it touches one more time, we're going to be flying. So I'll be increasing my exposure to the markets right now unless we get some sort of a negative economic report from the Fed or some sort of a negative downturn in the markets that's severe. Things look relatively healthy right now, which is why I believe if you want to increase your exposure to crypto, you should do it through an institutional grade investment vehicle. And that's why you should check out DeFi Tech. Okay, so it's DeFi.tech, DeFi.tech. And the reason we love this company so much is because they offer institutional grade exposure to digital assets through ETPs, which are exchange traded products. You can also get access to trading, strategic ventures, and even Web3 infrastructure all through DeFi Tech. But what I'm going to focus on right now is Valor, which DeFi Tech is the parent company to. And through Valor, you can get access to these ETPs on Bitcoin, Ethereum, and a bunch of other single-sided digital assets like Avalanche, Chainlink, Engine, Internet Computer. We're talking Near, Polkadot, Solana, Toncoin, Uniswap, and the list is going to continue to be added to. Now, this is extremely cool because as crypto, DeFi, and blockchain technology continue to grow and gain adoption, more institutional players will be looking for ways to get access to these cryptos in a safe and regulated manner. They won't be going and doing all this DeFi stuff like me and you through DeFi wallets. What they're going to do is going to go to a company and get access to something like an ETP, which actually makes their accounting a heck of a lot easier, and it keeps them above board with the regulators. So as time goes on and as more people find out about DeFi Tech and Valor, this is going to increase the revenues and earnings of these companies, and then you can take advantage of that growth through their stock. It's kind of like buying a piece of that digital asset future real estate. And so if you already have exposure to, let's say, Bitcoin, Ethereum, XRP, or any of the other single-sided assets that we just talked about, but you actually want access to all of those assets in one encompassing company that's going to produce real revenues for you, then the ticker is DEFTF. That's DeFi Technologies ticker. And as you can see here, they've been around a little while. Back in 2021, they had their all-time high at about $3.51. Since that point in time through May into October of 2023, they actually started trading pretty low, and this would have been an insane opportunity to start getting access to that stock. But since that point in time, they've been above that weighted moving average at the 30 EMA on a weekly time frame, consistently seeing support. And when it breaks out, it flies. As you can see here, we've already hit about a $2.40 local high. Now we're seeing support yet again at this 30 moving average. And so it's highly likely, right, that not only buying access to this is going to get you exposure to all of the revenues that this company is going to produce into the future by owning that stock. And basically, it's kind of like, again, owning all of those cryptos in one single stock where there's some major upside potential into the future as more companies look at crypto and DeFi in a regulated manner. That when we break above this $2.30 range, we're highly likely going to hit that $3.51 range. I know this doesn't look like a large move, but it actually is, right? From a percentage scale or standpoint, it's still at least, right, 80% up from here. And so based on the strength of this trend, the fact that we are currently in an uptrend, the fact that we're being supported right here, the fact that this thing looks far stronger, right, as a stock than the majority of the crypto market. Virtually all cryptos have been getting hammered recently, but this thing continues to trend up. It's a very good signal that it is being accumulated en masse. So again, if you want to get access to this thing, you can actually buy the stock. The ticker is DEFTF, and it's a great way to get exposure to all of the assets, if you will, and the future of DeFi in the world of institutional players. So if you want to learn more, head on over to defi.tech, defi.tech. And if you haven't already, again, one more time, go to bullrunners.com to discover how to earn crypto in less than 10 minutes with the #1 play to earn XRP game. Great way to take your XRP and put it to work for you. So whether the market starts to trend down a little bit, or it doesn't really matter because it removes a lot of that volatility and risk. And on the flip side, right, you can compound onto your XRP if we continue to fly into the end of the year for new all-time highs. Great way to add to that bag, putting your XRP that you currently already sit in and hold to work. So thanks so much for watching the video. If you haven't already subscribed, like the video, and I look forward to seeing you in the next video, my friend. Goodbye.